Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges, doing a quick update on our recent semiconductor holder ETF, the SMH bearish call spread, out of the money call spread that we based on extremes in fundamentals, technicals, and IV, and how it's looking 1 week later. So let's jump in and take a look, shall we? First of all, here is the kind of fundamental analysis as we talked about on the original video a week ago. You can certainly go to the website and take a look at that. But took off the biggest 6 components of the SMH because it really doesn't have a for sure, if you will, way to kind of gauge the overall SMH kind of valuation multiples, but certainly taking the top 6 that comprise well over 50% of the ETF can get you very close to home. So here you can see, here is a week ago, last Friday, or a week ago Friday to this past Friday, right? You can see NVIDIA price to sales starting to soften, came down pretty sharply there. Taiwan Semi basically softened, but just a little bit, but from a lower level too. Broadcom actually pretty much flat, right? So we have 2 going down, 1 flat. AMD pretty much flat the other way, right? Went up, so a slight rise here. Texan for the most part about the same, right? So really not seeing too dramatic an effect. Intel, right, which was the absolute leader of the semis this past week, and I recommended a iron condor on that stock. If you want to take a look at the latest video that came out, you can certainly do on that. Where IV even post earnings came out and were good, right? But IV actually didn't come down at all on Intel, so sets up for a very nice iron condor trade on Intel. But Intel price to sales did rise, right? So overall, you're seeing the fundamentals kind of just about the same over the past week. And as we know, the shorter time frame, the fundamentals don't matter as much. Longer term fundamentals mean everything. We also like to take a look, as we always say, at that fusion approach, right? Combining the fundamental, technical, and IV analysis. And this is where the kind of analysis really comes home on these shorter term trades. This was less than a month trade at inception. So taking a look at the technicals, we did a look at the SMH compared to the triple Qs just on a performance basis. Here you can see how the previous times it kind of got out over the skis versus the Qs. Inevitably, SMH did pull back here. We're seeing it at the biggest extreme of outperformance, certainly over the past 2 years. Fast forward to this Friday, right? You can see over the past 5 days, this is a 5-day chart on the triple Qs versus the SMH, right? SMH now the underperformer, as we kind of expected, by about 1%, a little bit less than that, 0.9%, right, or 90 bips. So you can see that finally the semis are losing a little luster compared to the overall NASDAQ. And remember, they comprise a big part of the QQQ. NVIDIA is by far the biggest weighting in both of those. So certainly we're seeing that sort of, if you will, technical combined with a little bit of just price action start to close, which is all we need. We don't need the SMH to actually pull back just to stop rocketing higher, was the premise on our trade, that it was getting a little bit overdone to the upside. Certainly on the IV front as well. And we'll take a look at that in a second. Here's the traditional technical analysis. Here's where we kind of put the trade on, right, going back to late April, right, the 27th, right. You can see that SMH kind of closed right near the highs here, right, and has now since weakened on a technical basis. We saw it going over 90 on a 9-day RSI, which is rare indeed. Briefly did that back here, which marked a short-term top, right? MACD also at an extreme, finally starting to soften, right? Bollinger percent B got to an extreme, finally starting to soften. Shares finally moving back towards that 20-day moving average a little bit. That's all we need on this sort of trade, right? Where we had that huge jump in IV, huge jump in technically overbought, and huge bump in fundamental valuations on a price to sales basis, setting up for a out of the money call spread, right, that expires in about a little bit less than a month's time frame. So certainly the technicals starting to weaken here. Time passing helps us too. We still have plenty of room to the upside. Our trade was the 555, 560 call spread. So we have another 10% or so upside over the next couple weeks now that we can have the SMH, which has already rocketed higher, right, from a little over a month ago, right, till now. Continue to go up at this pace might be difficult. That was the premise of the conclusion. Take advantage of high IV, overbought technicals, and overvalued fundamentals. And speaking of high IV, that's our final component, and maybe the biggest one. Here was the day of the trade, right? Going back, you can see we noticed that the SMH now approaching the highest level over the past year. This was the March lows, right, which normally see a spike in IV on the lows, not the highs, but because of massive call buying especially, the IV had exploded on the SMH. Here it was from a week ago Thursday to a week ago Friday, right, that huge run up in IV. Right here you can see again that from 20 days prior near the market lows, IV was back at the same level, and especially on the call side, calls went up 4 vol points, puts went down 4 vol points. So we're seeing now the calls trading at a big premium, right, almost to the puts, right, whereas before it was at a deep discount. So that thing had narrowed dramatically. The calls going up, puts going down, favoring again selling out of the money call spreads. Here was that move higher on the May expiration, traditional May that we chose, right, at 67%, right? It did make the unusual option activity here on that day. You can take a look at the original video, and IV approaching the highest level we have seen over the past 6 months by far, besides those kind of lows back then. Fast forward to this Friday, right, we can see that IV finally starting to come down. Here's the day of the trade recommendation. We said IV getting a little overdone. Certainly it was, right? It's pulled back nicely. We're seeing Thursday to Friday dropping nicely indeed again. And taking a look here, we can see going back to the day where we recommended doing the trade to sell this inflated IV. It was at 43.30, now under 40, right? And we can see now the put and call delta has widened back a little. The calls actually came down more sharply, right, than the corresponding puts. So certainly a very nice move there as well. You can see that from Thursday to Friday, another drop of 2 vol points. IV only at the 57th percentile. When back when we looked at it, right, it was at the 67th percentile. So certainly IV has weakened as well. And here's a chart of the day we came out with our trade recommendation on the 24th to sell inflated, what we deem to be IV. And certainly that's the case on this 30-day 25 delta IV. So IV coming in very nicely indeed. So that set up nicely for that trade to kind of take maybe a little bit off here. Now, here's the original link if anyone wants to go to the website, take a look at that original trade. You certainly can do that. But here was the original day of the trade, the 24th of April, right, selling the SMH May traditional expiration 15th, 555, 560 call spread for $1.15 net credit, roughly about 10% out of the money, right, with 3 weeks to go, right? So a fairly short-term trade. Selling it at around a 42 IV overall, right? And you do have positive theta, right? Time decay is working your way because you're selling the spread about 5 cents a day. Time decay, which is important on these sort of trades. Also, the jump in IV that we saw, right? That big jump in IV certainly sets up ideally, right, for a premium capture trade because theta is a very nice beneficiary of that high IV. The more expensive the option, the more theta or time decay, obviously, that you have. So we do see that pullback here, but theta is still certainly high overall compared to where it has been over the past 6 months. Fast forward to Friday, we can see that that trade, even with the stock going a little bit higher, has come in by about 50%. So here's kind of the particulars on the 24th, right? The SMH was at 506.44. that 555, 560 May call spread, right? About $1.15 and roughly a 42 IV. Fast forward to this last Friday, May 1st, right? SMH actually went up over 3 points, but the call spread basically cut in half, right? Why? You have time decay theta, we're positive 5 cents a day on theta certainly helps, right? And also that big drop in IV may be the biggest factor in the retracement of this premium on the call spread. So anyone who got into the original trade, you may want to consider maybe trimming some out. And even though IV's dropped, right, it's still comparatively rich. You may want to look to put on a further dated call spread, again, getting about 10% out of the money just on the premise that IV is still comparatively high, not at that extreme like we said, right? That valuation's still comparatively high, and technicals, even though they're soft, still comparatively overbought. So certainly the SMH may continue to head higher here, but I think the pace of the move higher will certainly have to slow given the rip higher we saw up until last week. So until next time, as always, here's to good trading. Take care.